Welcome to The Explainer. Today, we're diving into the discount retail giant B&M. And for any investor, this is a really fascinating company right now because it's like looking at two very different sides of the exact same coin.
So here's how we're going to break it down. We'll start with the market B&M plays in, then we'll get into the good stuff, the bull case versus the bear case. After that, we'll look at how the new leadership is trying to fix things, and we'll wrap up with the single most important question you have to ask as an investor.
Okay, let's get into it. You really can't understand B&M's story without first understanding the incredibly powerful market that it's a part of.
So let's start with the big picture. By 2031, the discount retail market in Europe is expected to be worth a staggering $55.2 billion. Now, if you're an investor, that's the first thing you want to see, right? A huge market with a massive tailwind. B&M is basically riding a very powerful wave. And here's the really interesting part. As things like inflation and cost of living pressures start to pinch people's wallets, shoppers are actively trading down. What does that mean? It means they're walking out of the more expensive stores and heading straight for value retailers like B&M. This isn't just some passing trend. It's a major shift in how people shop.
So how does B&M tap into all this?
Well, its business model is actually beautifully simple. It's a low-cost operation that doesn't need a ton of capital, which allows them to be really disciplined and smart about opening new stores. The whole goal is to be the #1 spot for shoppers on a budget, and this model is the engine that makes that happen.
Okay, so let's see how this model builds the bull case for B&M. This is where that smart strategy turns into some seriously impressive financial firepower.
Now this should make any investor sit up and pay attention. 30.4%. That's B&M's return on capital employed. For a retailer with actual physical stores, that is an exceptionally high number. It basically means for every single dollar the company plows back into the business, new stores, inventory, it's getting over 30 cents back in profit. That's a sign of an incredibly efficient, profitable machine.
And the engine behind that crazy high return has a few key parts. The company spits out hundreds of millions in free cash flow, its model doesn't require huge spending to grow, and it consistently rewards its shareholders. This isn't just a theory, it's a proven formula that creates real value.
And speaking of proven, check this out. When they open a new store, it pays back the entire initial investment in less than a year. Think about that from an investor's perspective. It makes growing the business an incredibly efficient and pretty low-risk way to use capital. It's almost like having a license to print money.
And here it is, the ultimate payoff for shareholders. Since the beginning of fiscal year 21, B&M has handed back £2.1 billion to investors in dividends. So this isn't just a growth story, it's an income story. And that is a huge part of the bull case for owning this stock.
But, like I said, every coin has two sides. For all of its financial muscle, B&M is running into some very real, very serious challenges. And that brings us to the bear case.
This really gets to the heart of the problem. Like-for-like sales, that's just a measure of growth from existing stores. They actually fell by over 3% in B&M's main UK market. At the exact same time, its biggest rival, Action, grew by more than 10%. That's a huge gap, and it shows B&M is losing ground.
And when you pull back and look at the whole competitive landscape, the picture gets even tougher. Action isn't just growing faster, it's also more profitable. And it's opening new stores at a blistering pace. We're talking over 350 new stores in 1 year, compared to B&M's 55.
So what's really going on here? This quote just nails it. B&M is fighting in a hyper-competitive market. This isn't a friendly game. It's a brutal price war, a race to the bottom. And that puts enormous pressure on profits for every single player. For an investor, that's a major red flag.
So that leads to the obvious question. What is the company doing about it? Let's take a look at the new leadership and their plan of attack to get this business back on the right track.
Well, the board's first move was to bring in a new CEO in 2025, a guy named Tjeerd Jogen, and his resume is just packed with top jobs at major European retailers. This wasn't a random hire. It was a clear signal that priority #1 is to fix the nuts and bolts of the retail operation. They brought in a hands-on guy.
And management's plan isn't some fancy, complicated strategy. Nope, it is a back-to-basics approach. First, they're fixing their execution on fast-moving consumer goods. The everyday stuff like shampoo and snacks that gets people in the door. Then, they're retooling their pricing, and finally, they're just doubling down on making sure the stores are clean, stocked, and running smoothly.
Now, beyond the immediate fixes, this is the bigger picture. They're still planning to open more stores in the UK and grow their Heron Foods convenience chain. But the strategy now has this really interesting tension. They have to pull off a critical turnaround in the UK while also making a huge bet on expanding into France, which they think is their next big growth engine. And all of this leads us to the final conclusion for any potential investor. B&M has hit a really critical inflection point where the old rules of the game just might not apply anymore.
This quote from the analysis just sums up the whole situation perfectly. The easy days of making money just by opening more and more stores, those days are over. Any future growth and any future returns for shareholders is going to be a lot harder to get. It's going to have to be earned through just being better operators than the competition.
Which leaves us with the final pivotal question an investor really has to answer. Can this new leadership team actually fight a war on two fronts? Can they pull off a really complex turnaround in their massive, mature UK business, while at the very same time winning the battle for a brand new market in France? The answer to that question is going to determine the entire future of B&M.